Good morning, everyone. This is Japanese Economic Review Channel. Today is Wednesday, May 27th, 2026. We will begin by reviewing the Japanese market performance from yesterday, May 26th. Our focus will be on the intraday volatility that tested investor sentiment, the notable sector rotations, and several strategic corporate announcements that highlight the ongoing integration of AI and infrastructure development in the Japanese economy. On May 26th, the Nikkei 225 snapped its four-day rally, closing down 162 points at 64,996. The Topix also saw a slight decline of 4 points. This pullback was widely viewed as a, quote, healthy consolidation, following a massive gain of over 5,000 points in just the previous 3 sessions. With U.S. markets closed for the Memorial Day holiday, the Japanese market moved primarily on domestic technical factors and profit-taking. The intraday chart shows a classic V-shaped recovery. After a strong opening, the index plummeted to a daily low of 64,605 by 9:21 a.m. as investors locked in recent gains. However, this sharp drop triggered aggressive dip buying from those who had missed the initial rally. This strong support floor allowed the market to pare back most of its losses by the closing bell, demonstrating significant underlying resilience. Market breadth on the prime market leaned toward the downside, with 816 stocks declining against 698 advancing. Despite the slight drop in indices, trading activity remained exceptionally high, with a turnover value reaching 9.8 trillion Japanese yen. This high liquidity suggests that, while there was broad selling pressure, it was met with equally substantial buying interest, indicating a very active and engaged market. We observed a clear sector rotation. Heavyweights in the tech and electrical sectors, such as Tokyo Electron and Advanced, faced headwinds as investors rotated out of high-flying semiconductor stocks. Capital flowed instead into laggard sectors like construction, with gains in Taisei and Shimizu, as well as information and communications, led by SoftBank Group. This movement suggests a strategic rebalancing toward domestic demand and undervalued sectors. The TSE Growth 250 index mirrored the broader market by snapping its winning streak, though declines were contained. Individual stock performance was mixed. We saw continued capital inflows into the space and AI themes, with QPS Holdings and Axel Space Holdings advancing. Conversely, tech-related names like Terra Drone and PowerX saw outflows. This indicates that even in a consolidating market, investors are cherry-picking high-conviction growth themes. On the corporate front, AI implementation is accelerating. FRONTEO announced a major upgrade to its Kibit Libria solution, now featuring direct API integration with generative AI engines. Similarly, Junior West and EIZO launched an evolved version of their image recognition AI, Mitakoka Edge. Meanwhile, Rakuten Group expanded its ecosystem by announcing that FamilyMart will join its SPU platform starting July 1st. In the retail sector, companies are focusing on expansion and consumer needs. 7&i Holdings is launching new healthy meal options nationwide, while Yakult is rolling out a new strawberry flavor. Notably, GeoHD is continuing its international expansion by opening a new 2nd Street location in Singapore. These actions reflect a robust focus on capturing both domestic and regional consumer demand. Strategic moves are also addressing long-term structural issues. Obayashi secured a critical design approval for a hybrid offshore wind facility, marking a milestone in next-gen energy infrastructure. Addressing Japan's aging society, Daiso launched a new initiative focused on engineering solutions to mitigate senior fall and fracture risks. These projects demonstrate how Japanese corporations are aligning their growth strategies with social sustainability. In summary, yesterday's 162-point drop was a contained profit-taking event that masked robust underlying execution. The aggressive midday recovery proves a resilient market floor exists. While we see a rotation within tech sectors, the uninterrupted progress in AI deployment and massive infrastructure projects by companies like FRONTEO and Obayashi signal strong long-term health for the Japanese corporate sector. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.